Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, PolarFuturesGroup.com. Welcome back to the show, Victor.
Well, Jim, good to be with you.
Wow. Talk about a bumpy market. We had the Dow Industrial hitting all-time highs in early October. Then it fell nearly 3,000 points in the next 3 weeks. Since then, we've had dramatic ups and downs. Yesterday, it closed nearly 1,000 points below Monday's highs. What are you making of this amazing volatility?
I think from, let's call it the 30,000-foot view looking down, I think maybe we actually made a very important turn in market psychology, at stock market psychology, at the end of September, beginning of October, when we were at those all-time highs. And that the volatility that we're seeing, and the volatility is both up and down. I mean, I can't remember how many 500-point plus days on the Dow we've had up and down here since those all-time highs. I think that volatility is more symptomatic of a bear market condition as opposed to a bull market condition. In 2017, for instance, the market just kind of chugged gradually higher all year long. You know, people are going, God, we haven't had a 3% down day or week, in a long time. And now here in this year, we've got sort of the total opposite of that. So let's call it the big picture view from, commercial flight elevation, that maybe we've turned a corner here from a very long bull market and we're now into a bear market phase. Hard to say how long it lasts, but if in fact that's the case, then I think you have to accept the point that we were probably too high when we were making the highs. The market had been driven up there really on the back of just a couple of handfuls of stocks, and then certainly the leading FANG stocks, the high-tech stocks were in that group of market leaders. I'm noticing, for instance, a lot of rotation within the indices. For instance, just yesterday, the bank stocks were getting clobbered. And perhaps, that made sense with interest rates and the changes in the interest rate markets that were happening. But, you asked me what I make of the volatility. I'd say it looks to me like maybe there's been a sea change from a 9-year bull market, and now we're in a bear market phase. How long it lasts, we'll see as we go along. But the trading that I've been doing the past couple of months has been from both the long side and the short side. I've probably been more cautious, so that means trading smaller size, or when I find that I bought something and it's going down, I just go, okay, I'm out of here, so I'm gone quickly. I think it's more that kind of a market, maybe, it's in some people's language going to be more of a stock picker's market than just a market where you can buy the indices and like an index and ride that, and everything will be fine.
So now you're going to have to do some research and find out what's safe. But if the whole market's coming down, doesn't that even pull down the safe places?
Yes, in a way it does. But there's the capital will rotate from the leaders like the tech stocks and maybe look for things, like maybe they buy what we would just call more defensive stocks. So that there will be that, but. Yeah, when the market is going down, it'll sort of take no prisoners, and even the good stocks will get marked down. And the people that have for some time have been saying, hey, this market is way overvalued, folks. If you're in this, you're taking too much of a chance. You should have some powder dry. those folks will be having their eyes on what to buy if, in fact, the good stocks get taken down with the bad ones.
Company executives several months ago started to sell off. Obviously, they knew something was happening, yet the average investor was still jumping in with both feet. Is that something you have to be aware of? What are the insiders doing?
Well, absolutely. Insiders in the stock market would be thought to have better information about what's going on with their stocks, but they may have other motivations as well. I mean, we have seen, let's say this year, we're probably going to be well over $1 trillion has been returned to shareholders. That's the expression that is used through share buybacks and dividends. And certainly some of the motivation to do share buybacks might be on the part of management to see that the share price stays high because they have a vested interest. They get paid by in some way or another with a high share price. So yeah, you do have to watch that, but I think there's a lot of things you have to watch, and maybe if you back away a little bit and you just look at the big picture and you say if going forward from here, it may be a different market.
We'll have more with Victor Adair right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Victor Adair. Victor, if we look back over the last few years, we've had some major corrections, 10, 20% happen. Is this going to be the same thing, and then the market just rarely marches ahead again and goes high again or upwards?
I don't know. I think we may have made this major change from a 9-year bull market, and we're into a different phase. Certainly, it seems that the people that were ready and willing and anxious to buy any dip have been chastened, and they're not there like they used to be. There seems to be some gaps that happen in the trading, so that you don't have a list of bids under the market, list of offers over the market. The market will gap from price to price. As I say, I think the psychology has changed in the market, and that's going to make it you'll have to approach it from a different angle, but certainly one of the things you want to watch is what the insiders are doing with their own capital.
During one of our interviews a couple of months ago, you talked about how politics had replaced central bank policies, the main factor driving volatility. Do you still think that's the case? I think politics has been hugely important. And let me give credit, by the way, to Chris Wood. He's an analyst that writes for CLSA out of Hong Kong, and he turned me onto that idea a couple of months ago, and I thought he'd nailed it. That for the longest time, it was all about central bank policy and really what that meant, and people would create these charts and say, look, here is the increase in the balance sheet of the central bank. You overlay that with the increase in the S&P 500 or the Dow Jones, and the lines just are, running dead even with each other. So it doesn't matter about anything else. If the central bank keeps printing money, then the assets keep going up. And it was like, wow, is that all there is to it? And then, let's say Trump happened, and that truly introduced, or let's say elevated to a more important position, the impact of what politics would have on the markets. And what better example than what we've just had here this last week or so, where the market leading up to the meeting of Trump and Xi in Argentina at the G20 meeting, the market seemed to be
very hopeful that the trade tensions were going to be reduced, that it was going to be in Trump's best interest to do that sort of thing. And so we had a great run-up. I think last week in the broad American indices was one of the best weeks we've had in a few years. And then it's like, whoops, we get into this week and the Chinese are quiet, and there's all of a sudden a lot of doubt as to whether or not Trump is saying what really happened. And yesterday we had the Dow down, well, I guess from Monday's highs to yesterday's lows, it was about 1,000 points tumble. So, yeah, politics has introduced another level of volatility. And if anything, it's both now central bank policy and politics, because we've had some very dramatic moves in the market here as the market sort of is trying to, say, reinterpret where interest rates are headed, given what the Federal Reserve and the spokesman for the Federal Reserve are saying. So there's a lot of pushes from outside onto the price action in the stock market that are coming from politics and also from central bank policy now. So that just double your pleasure, double your fun.
We'll have more with Victor Adair right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Victor Adair. Victor, the market's expectations where the interest rates will be headed seems to have changed a lot over the last couple of weeks. Do you think they're still going to continually hike rates? And if they do or don't, how's that going to affect the stock market?
I think the market has made a judgment. And let's not make it a monolithic market. There's a couple of markets here. It was about 3 weeks ago or so, I know I was talking about how Powell, the chairman of the Fed, and his vice chairman were both starting to indicate that the market pricing for Fed interest rate increases next year might have been overdone, or at least that's how the market interpreted it. And the credit markets 3 weeks ago started to price in that the Fed was going to be not as aggressive in raising rates next year as they had previously been pricing in. It seems to me the stock market didn't get the memo. The credit market saw this coming, to a lesser degree perhaps the currency markets, but you could see it in the forward euro-dollar strip in particular, where things had changed a lot over the course of a couple of weeks. And then, you got Trump chirping away, saying things about the Fed, and in particular Powell saying unpresidential things about the head of the Federal Reserve, and that's just added another level of uncertainty, at the very least, into the equation. The last week, I guess, when Powell spoke again, then it seemed like the stock market got it, and it was like, wow, that's great, and it added or it gave some accelerant to the rally we had in the stock market last week. That hey, the Fed's going to be easier, but the reason the Fed is not going to be as aggressive as raising rates is it seems there's a slowdown in the global economy that may also be impacting the American economy. Who knows? But that was the expectation in the market, and I think if we're going to see different interest rates going forward in the United States than what we had expected even just a month ago, that is definitely going to have an impact on stock markets and the other markets as well.
What do you see the impacts being on currencies and the gold market?
Okay, fair question. I mean, I think the currency market, one of the things that has been a key underpinning of the strength of the U.S. dollar is what I've been calling a divergent central bank policy. What that means is American interest rates have been stronger or higher than the interest rates of a number of the other leading developed countries. And that has helped the U.S. dollar attract capital to America, which would boost the U.S. dollar. And that has been, let's say, the strength of the U.S. dollar has been a depressant on the gold market, just as rising interest rates and therefore rising real interest rates, which is actually what's happened, has been another depressant on the gold market. So if going forward, the market assumes or takes the view that interest rates aren't going to be going up as much as had been previously expected, there's going to have to be a recalibration as to the importance of that when it comes to what the currency values are. So that could mean then that the U.S. dollar is less likely to rise more if interest rates aren't going to be rising, and then if interest rates aren't going to be rising and the U.S. dollar is not rising, then the gold market is going to be maybe more likely to rise than it would have been before. Now, those aren't forecasters so much as just saying that would be the impact on these other markets if there has been a true sea change in what the Fed is going to be doing with interest rates as we go into next year.
What about the bond market?
Well, the bond market has had a strong rally here for the past month or so. As I said, the bond market, the credit markets kind of got the memo, as it were, a good 3 weeks ago that the Fed was sending some signals that they were going to be not as aggressive in raising rates next year as the market had previously been pricing. And also, we had let's say, a huge speculative short position in the bond market, and as bond prices rose, some of those shorts started to throw in the towel, and that added more buying. So we've had a good, strong rally in the bond market here the last month or so.
The price of West Texas crude hit a 4-year high in early October. Since then, it's been falling rapidly. What do you think is going to happen in the crude market? Well,
that fall that we've had, the fall was about 30% from the early October highs to where we were at the end of November. I think the last run that we had in crude oil, or let's say the last month or so before we made the highs, I think a lot of that was speculative buying on the thought that the American sanctions on Iran were going to really be important to the market. You were hearing talk at that time of possibly $100 crude oil. What I'm saying is that the bullish enthusiasm was such that we probably went higher than we should have, to get up to $76. And then as it became evident that prices weren't going any higher and started to slip, they had further to fall because they'd gone too far in the first place. So part of the reasons for the slip, certainly the impact on Iranian exports was not as dramatic. The Americans were giving waivers, they call it, to I think it was about 8 different countries who could continue to import Iranian oil. So it wasn't like they're slamming the door on Iranian oil. And then Russia, Saudi, and the United States all boosted their production to all-time record size. And there was a cutback in the forecast for future demand growth, both by OPEC and by the International Energy Agency. So it was kind of like it never rains, but it pours, and then a lot of people who had speculative long positions in crude had to throw in the towel, exacerbated the decline, and prices really came down. So here we are down around $50. I think we had 7 consecutive weeks lower, and that's a record going back a number of years. Probably the market is oversold here. We've got the OPEC meeting coming up here in a couple of days in Vienna, their annual meeting, and anybody that's hopeful that we're going to see higher oil prices has got to hope that OPEC, and that's going to be mainly Saudi, and Russia will come to some agreement to reduce their production to try to put a floor under the price decline. Just looking at it, at the chart, the way it's come down, it's had a bounce. It seems every day the last week or so we're trading through at least a $2 range every day. I got to be a little bit from Missouri to think that we're just going to get a bounce. I think that we may have to grind it out for a while before we see it turn higher. But I don't have a position at the moment. I'll let the market show me what's going to happen, and then I may step in.
Was Rachel Notley, the Premier of Alberta, right to put in almost a 9% production cut to the production of Western Canadian Select oil to boost the price?
Well, I can see what drove that. I mean, they were in a hell of a spot. There was more oil being produced than was being exported. So let's call it the inventories within Alberta were rising. And I mean, at some point you run out of storage space. I mean, we've seen in Canada last year, I'm thinking, natural gas being sold for less than nothing because there just was no demand for it, and it was coming out of the ground. Was she right to do it? I can see the industry. I mean, I think it was Imperial Oil who came out and spoke against it, and forgive me if I got that wrong, but I think it was them. There's Cenovus seemed to agree that it was the right thing to do. To cut back the production seems like a good step if you're producing too much, and because of producing too much, the price of Canadian heavy oil was, $15 a barrel. You're giving it away for free. So maybe the production cutback was scheduled to kick in January. It's supposed to be a temporary one at some point. I guess they're hoping that they'll be able to go back to fuller production. As a trader, I don't look at it so much as is it good or bad or the right thing or the wrong thing to do. I just think, okay, what's the impact on prices? And it seems like, it's given Western Canada Select a bit of a floor, or given it a boost even from the very low prices it was at.
Victor, what do you see happening in the new year?
Okay. I mean, I'm not going to say, about the gold's going to go up and this and that. I mean, I'm short Canadian dollars. That's one of the positions I've had on. I think the Canadian dollar traded to about an 18-month low today when the Bank of Canada signaled that maybe they're going to be less aggressive about raising interest rates next year, early part of next year, than what the market had been looking at. But again, from that 30,000-foot elevation, I'd say that the thing is, we're going to see change. And maybe more than we can imagine. And in a way, the things that have worked previously won't work. Let's say, especially, if maybe way too many people have been embracing something. So one of the things I see out there in the world is that there's been such a huge flood of money just gone into index funds. Because then if it's an index fund, then the management expense ratio can be really cheap, or I see Vanguard, I think, brought out some where there's no fee. So let's say that doesn't work anymore, that maybe you have to go the other side and it'll become a stock pickers market, as we were talking about earlier. If there's a general decline in the market, some really good stocks will be worth buying, but you won't get that by being in an index fund. There's been a big thing called risk parity, where you have a blend of stocks and bonds, thinking that if the stock market goes down, then the bond market will go up, and you'll be saved. So how that could go horribly wrong is if stocks and bonds both go down together, and I could see that happening. So, I think that would be one of the things that would be key, that kind of a change. And then, but I said I'm not going to give you forecasts in terms of prices. I don't think that trading success is dependent upon having the best crystal ball. It's nice if you form an idea and you get motivated from that idea to buy something, and that something goes up. But believe me, I am very well aware that you can often have bought into something because you think it's going to go up for the wrong reasons. I mean, it goes up, but not because of what you thought was going to happen. So that's a great case of just, being in the right place at the right time. I think trading success doesn't come from just having this great crystal ball, but from managing risks, being able to admit you're wrong, be able to get out of a trade and before it goes really badly on you, and put your money to work in something that is working. So, be patient, be humble, and just know that it's not a game of perfect.
Victor, thank you so much for chatting with us.
Jim, it's always a pleasure. Talk to you again in the new year.
My guest has been Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Questions for the show or our guests can be sent to info@HowStreet.com. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.